What up guys, Kevin Cage back with another XRP update. To kick things off, I want to show you an absolute must-see video clip shared by Jimokes on Twitter. I have retweeted this. So this is a PowerPoint we showed a while back of the Federal Reserve Bank of St. Louis, of course directly referencing Ripple the company and utilizing a currency-agnostic peer-to-peer payment system to facilitate low-cost payments. So I want to show you this clip, and this was years ago, and then we're going to fast forward to this clip. So listen up, I absolutely love this. Directly mentioning, corridors like the Philippine peso, which on-demand liquidity, aka XRP is that bridge asset, is already working on expanding. So listen to this quick clip here.
Existing alongside this institution is something like a Ripple platform, that currency agnostic peer-to-peer payment system I just described that facilitates low-cost payments. So, potentially consumers can bypass Western, that $10 service fee. I mean, that's going to be a thing of the past. I mean, with Ripple, you'll be able to send money anywhere in the world for very, very, very low cost. So that's something that could come together, kind of this marriage of, well, I thought I'd end on a happy note.
And we know who that is, Janet Yellen and Satoshi.
Don't they make a lovely couple? Thank you very much.
And so keep in mind, it is very common for a lot of these Federal Reserve banks of a variety of cities and states. They do a lot of experimentation, they look at innovation, and they're looking at a lot of technology across the board. And yes, they have deep, deep ties with Ripple. If you go to some of the insights pages from years ago, such as like this with Ripple and KPMG, one of the big four that I'm certain you have heard of, including Deloitte and many others, we can see that KPMG has directly even said that Ripple is poised to revolutionize the space, and just talking about, the pulse of fintech, talking about international and cross-border payments, overall, B2B transfers, the need, and of course these tier 1 banks are just not, set up or even adequate enough to change all of this information and this data and the way money flows today. So I just wanted to show you that clip. Now let me show you right here, this top one, and I love this.
From domestic payments. Domestic payments, as we were saying before, are cleared by the central bank. Internationally, there's no central bank. So international payments need to be cleared and settled by large commercial banks. These are large institutions that hold balances with each other,
right,
that record the transactions that go across borders, that take on significant risk, but also take advantage of a certain monopolistic behavior, position, that makes for services to be very expensive.
Now, how would this change now?
How would this change? So.
And so keep in mind, this is what I reference all the time. Notice how he's using words like monopolistic. What are the three big banks that control essentially the $155 trillion market? HSBC, which is already RippleNet, JP Morgan, and then also Citi. Direct connections to a lot of these institutions and Ripple partners that we discuss. So these big commercial banks are overseeing the transfers, controlling the funds, and they're going through their fragmented silos. That sounds a lot like counterparty risk, and any other fintech companies such as Ripple that's aiming to level the playing field, so to speak, and destroy this monopoly that these big players are getting and capturing all the profits of this transaction banking market. It is very unfair for the everyday people, and it's just simply a matter of time. In my opinion, we are just another day closer to the inevitable. We have some people, screaming sub 20 cent XRP. There's other people screaming $10 XRP. In my mind, just maintaining that long-term vision is key, and that is not financial advice.
In three main areas, or two main areas.
Yes. I mean,
we have some questions from the audience, so we want to make sure that we have time for that.
Fantastic. Well, thank you for sending questions, and we do want to get to them. So in the paper, we go through various case studies, various scenarios of how technology could change cross-border payments. I think the most interesting is the use of tokens. And now we go back to the virtual currency idea that we were relating to before. And what if, instead of going through the banking system, through these big commercial banks, what if we use tokens to send money abroad? What if I could pick up my phone and somehow transfer fiat currency, say dollars here in Washington, into a token that is on my phone, press the button, and have the token be sent to my friend in the Philippines on her cell phone. And she would then transfer those tokens into the local currency and go shopping with the money. That would bypass, you see, the entire correspondent banking system. Could make for much faster payments, cheaper payments, more traceable, better services altogether.
So what do you think they're going to choose in the future? Of course, you can create a JPM coin, you can use a utility settlement coin, you can use that RTGS or RTS Global, but they do not check off or tick off all the boxes that XRP and the XRP ledger specifically address. There is a method to the madness here. All right. So anyways, onward. Referring to the big four, all connected to Ripple, we can go through all of them, of course, and we've mentioned this many, many times, so I'm not going to bore you with the details. And keep in mind right here, XRP Crypto Wolf, KPMG, Coinmetrics, and BitGo, and we'll reference them in a minute, offer combined product suites to further crypto adoption by institutions and banks. They will be delivering the products and services that institutional clients have needed to allow broad adoption of digital assets, being that bridge to bridge this new asset class to the traditional infrastructure. Notice below I just posted a screenshot available with a simple Google search on Ripple Insights. BitGo, years ago, builds enterprise wallet for XRP, not any other asset, enterprise wallet for XRP. We also know that PayPal and BitGo were looking, or PayPal was essentially looking to potentially acquire BitGo. All these chess pieces are moving. Nonetheless, I just smell opportunity. All right, we'll keep going. Here's the actual website in case you guys want to go vet that yourselves. Now, really quick, the Spectator Index, to give you some perspective, because I know that we've had this pullback, some assets are down 20%, some are down 10%. There is fear in the market. Now, unless you've seen something completely break structure, I would, maybe sleep on it. Don't act out of emotion. We all act like we're ready to buy the dips, and we pray for those dips, and when they in fact come, we're usually too afraid to even pull the trigger. So when in doubt, zoom out. Understand the markets are cyclical, and yes, there can be some massive pullbacks and crashes always on the horizon. So there's nothing wrong with taking profits. Just please do what's best for you. Everybody has a vested interest in this space. All right. So Bitcoin price, to give some perspective, just 1 year ago was under $10,000. 6 months ago, under $12,000. 3 months ago, not even past the all-time high of 19,000. We're around 17K. And then 1 month ago, arguably even just 3 weeks ago, when we had that other pullback on that bloody Sunday, because typically Sundays are usually the pullback days, the bloody days. That weekly candle in a bull run will kind of wick down and create that foundation before going higher in those cyclical structures. And now we're around that 53,000 mark. And I'm going to show you a few things that really makes me curious, and I simply think this is part of how the game is played. There's corruption everywhere, in the retail space, in the wholesale space. Everybody's human, so this is pretty crazy. So Crypto Whale, longtime investor in Bitcoin, as you guys know, XRP years ago, and just kind of pointing out a few things. So as Bitcoin crashed nearly 20% just last night, Tether injected another $300 million into Bitcoin to prop it up yet again. Binance, then the exchange, one of the biggest ones in the world, disabled withdrawals around that time, and it went down, in quotes, down for maintenance, to stop people from selling. Now, some people will say this is way too conspiratorial, but, several years in the space, like you guys, I'm sure we see this time and time again. Why do all these exchanges go down at times like these? Who owns these exchanges? The big players. Why do we always see the biggest amounts of money of stablecoins or Bitcoin on the move right before huge volume is injected into this market to bring the prices up or down? It makes you wonder, all right? So this is just some proof right here, and we see this time and time again. So very interesting nonetheless. Right here, Fidelity, guys, Fidelity Charitable, received $28 million in crypto donations in 2020. As we saw, a lot of representatives are taking notice of this or taking note of this. We can see that even with unstoppable domains, there's been some domain addresses, .crypto for Congress as another example to receive donations. People are aware of this, celebrities are smelling the money, and it is just another day towards the inevitable. Toward, of course, the assets that are solving real problems for real customers. We know there's 5,000 plus, almost 10,000 crypto assets that are, essentially around today. And a lot of them are fraudulent. Some of them are just white papers. Some of the greedy owners just want to, essentially fund some money during this hype. But the assets that are legitimate, that truly want to solve a problem with the leaders that are actually looking to make the world a better place, are going to solve this problem in a massive, massive way. So yes, per their tokenomics and token distribution, like the token economics of the asset in terms of appreciation, there is a lot of potential upside if some of these tokens that you're investing in, ADA, Algo, any other asset, XRP, Ethereum, DOT, I could just name a bunch, literally I could name like 50 plus. If they do solve their problem, there's going to be tremendous upside. Maybe not tomorrow, maybe not next week, but in the long term, all right? And also, this was just the other day, so just kind of talking about circulating supply of Tether. This was on February 19th, so just 3 days ago, we were at 33.5 billion. Then, of course, we are growing. Let's see. So wait, oh, that was February 19th. And then of course, later on, we went and grew a little bit to 34.1. And then today, as we can see, we're at 34.45. So just tracking that circulating supply. Of course, many people believe it is simply a matter of time before this implodes. And some people believe it will all be fine. For me, just like Ziegler says, excuse me, I'd like to prepare for the worst and capitalize on what's to come. It might be a very boring, very conservative way to look at things, but it's just how, I'm operating in this market. After, going on early on and not taking profits, I will always take profits in this market as a personal choice and also have a long-term position for life. And then days like this, when we do come back 10%, 20%, yeah, potentially I can use some of those profits that are in US dollar to buy some of these things and dollar cost average or add to my position. So nonetheless, I don't see any structures broken. I don't see anything that is creating complete panic and these assets are going to zero. It is just another day in the life of crypto. Though there's fear, there's adrenaline, and there's opportunity. Almost done here, guys. Right here. So shared by Flare Networks. Beware, and I just wanted to give a public service announcement to everybody. So these FLR tokens, the Spark token, is just a representation that currently exists on any blockchain, even including Ethereum. So if you're buying anything called FLR, Flare, Spark on any of these exchanges, whether it's Poloniex or Bitrue, please be aware it is not necessarily Flare or a Spark token yet. So you could lose your money. So please be smart. Now, am I excited for the potential valuation and appreciation of the legitimate Spark token when distribution starts and Flare Networks goes live? Absolutely. It's really fun to speculate some of the price potential for that, and we're just going to have to cross that bridge when we get to it. Overall, I want Flare Networks to be a massive success, showing that AVAX for Consensus, or Avalanche, I should say, combining with Ethereum's EVM, and then utilizing XRP and combining its settlements and overall just efficiency as that bridge asset is beyond exciting. And I cannot wait to really start learning about collateralizing all my positions and earn a passive income. All right? And last but not least, and we'll call it a day, shared by XRP Crypto Wolf. 1/4 of United States investors owns cryptocurrency. Right here, 2/5 of US investors think investing in crypto markets is no more risky than putting money into stocks, with 27% saying they plan to invest this year. So of course, guys, this is no surprise to us. We are edging ever closer to another day of real-world adoption growing at scale. Early 2017, big bull run brought more people into the market. Later in 2017, the bull run that we all know and love because Bitcoin kind of surpassed that huge price, or that psychological barrier, surpassing even $10,000 and then $19,000, bringing more people into the market. Those that were brought in then have stayed typically, and those that have stayed and have seen all they need to see have simply been DCAing, dollar cost averaging along the way. However, am I bullish long-term on this market? Absolutely. How can you not be? This whole market is going to displace everything that we know in terms of value, even data, trust, reliability, uptime, everything. But the downside and the upside, depending on how you look at it, is we have still barriers to entry to address, such as early on, yes, grandma could have some issues trying to buy Bitcoin, getting public and private keys, storing them properly, learning how to self-custody. Yeah, it was very, very tricky and complex. A lot of people have lost access to their crypto. So what did we do? Well, Coinbase and other platforms saw an opportunity and a problem to address and also make money, so they made applications. So grandma can download, Coinbase on her phone. She can buy her first cryptos, Bitcoin, Ethereum, whatever she wants, and they kind of store it. However, there's still an issue, and it's not really fully utilizing the advantages of what cryptocurrency brings. So now you have the issue where, she's still not self-custodying. There's still issues of identification and KYC that needs to be addressed. There's still issues of uptime and accessibility if their servers go down, which we've witnessed with many huge exchanges. So we want to create a true distributed peer-to-peer payment system where value can move as easy as information does today, just like texting a friend, calling, sending a picture. That usually happens and works all the time. Today, the correspondent banking network, it essentially has a failure rate of 6%. That is unheard of. So we have a long way to go in terms of regulations, KYC, identity, transparency, and also still adhering to a lot of privacy features. But all in all, I see opportunity where many people see hurdles. So I'm beyond excited for the future. I hope you enjoyed this video and stay tuned for the next one.